A defiant rally. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 15th, 2019. And I say a defiant rally because the current rally for the whole year in the major indexes, I'm showing the S&P 500 here, is kind of defying the dimming economic outlook. And let me show that. Here's a great article from the Wall Street Journal, and it says, Global stock rally defies dimming economic outlook. And so every forecast, from the IMF to the Eurozone to U.S. economists are talking about a slowdown in economic growth. And yet, the band plays on. The market continues to rally. As you read forecasts for earnings for the S&P 500, the forecast is that earnings growth will definitely slow. Now, we're just approaching earnings season, so we're going to see if that's true. But the growth that we saw over the last couple quarters from the tax cut looks like it has kind of been baked in, and whether it's currency or slowed growing or other factors, it looks like earnings growth and economic growth globally are slowing down, yet the market continues to rally. And so it raises the question, how long can that go on? And really, here's the key point. It says, global stocks are rising at the fastest pace in decades as growth around the world slows, leaving many investors questioning how much longer the market can defy the gravity of the underlying economics. So this is worth reading, this Wall Street Journal article. Again, the title here is Global Stock Rally Defies Dimming Economic Outlook. So it's worth reading, and the article makes some really, really good points. But, so what do we do as traders? The market's going up, so, we go up with it. And if it turns quickly and heads down, we'll go down with it. My trades are currently balanced between short and long. We got some really nice short trades. We went long, short. We got some really nice short trades. We went short on UTHR. It is down about 4% already in a few days. We've been long Delphi, DO, XPO, and we're in some nice profit on those trades as well. So the key here is just trading the realities of the market, using good risk control, and waiting for, what's going to happen next. So as we approach earnings season, I think it's going to be really important. And, if earnings growth is slowing down, the market could react. And of course, we got the China trade negotiations going on. They look like they're going well. Been some milestones hit. There's some optimism. If that hits a snag and all of a sudden the headlines are, oops, right? We got some impasses and it's falling apart, I think we'll see a dramatic reaction. So we just have to be nimble. We have to be prepared. We have to trade the realities. And that's what I've done for years. We are carving out some good returns consistently year over year as a result of that. But meanwhile, hey, the market's going up. It's heading toward the all-time high, which was put in last year on the S&P 500. We'll go up with it with long stocks, and there's some that are going down. Like I showed, we'll go down with them. We'll pick the very best trades. We'll manage them with discipline and, continue to make profits. But it's not dull, and we'll see. I think earnings and trade are the big things to keep an eye on here. And again, there could be a dramatic move, and you got to be nimble and be ready to take advantage of whatever that move is. And we will be. All right, thanks. As always, welcome your questions, your comments, your feedback. Be sure and leave them there. All right, take care. Trade safe. Use risk control. Let's keep the winners big and the losers small.